The PMI, or Purchasing Managers Index, is an important tool used to get timely insights into business conditions in the manufacturing sector. It is a survey-based measure that looks at factors like new orders, output, employment, supplier delivery times, and inventories. The idea behind the PMI is to predict economic changes before they show up in official data like GDP, which can sometimes be slow to release or less reliable. The index is calculated by combining 5 different survey questions, each weighted differently. For example, new orders, which often shift before other indicators, have the highest weight at 30%. Output is weighted at 25%, employment at 20%, supplier delivery times at 15%, and inventories of goods purchased at 10%. The index is widely used to predict shifts in the economy and to gauge business conditions. It includes measures like business output, new orders, employment, and purchasing activity. The survey also asks companies about their forecast for the next year, whether they expect higher, lower, or the same output. The Russian manufacturing sector entered contraction in September 2024, ending a 28-month period of growth. The PMI, which fell to 49.5 from 52.1 in August, indicates that while the decline was slight, it marked the first drop in manufacturing activity since April 2022. This downturn was driven by contractions in output, new orders, and employment, along with weaker demand conditions. Production levels in the manufacturing sector were impacted by delays in input deliveries and material shortages. These supply chain disruptions have been ongoing, with September seeing a sharp decline in supply quality. Input costs and output charges both increased at a faster rate due to higher transportation and supply prices, which were largely passed on to customers. In fact, selling prices in September rose at the sharpest pace in almost a year, highlighting the increased pressure on producers to transfer rising costs to end consumers. The overall performance of Russia's manufacturing sector, as indicated by the PMI, shows a broader weakening in the sector. Although the contraction was slight, the renewed decline in output marked the first drop since July 2022. This reduction in production was closely linked to muted demand conditions and ongoing supply chain issues, including delivery delays and input shortages. These delays hampered production capabilities and led to a contraction in new orders. Supply chain disruptions worsened due to challenges in rail transportation and international logistics, leading to a major deterioration in vendor performance. In September, the lengthening of delivery lead times was the second largest since July 2022, indicating that supply chains are continuing to struggle with logistical inefficiencies. These delays have made it difficult for manufacturers to receive the necessary inputs for production, further straining output levels. The rise in input costs during September was driven by raw material shortages and increased transportation fees. Russian manufacturers, in response, passed these higher costs on to customers, with output prices rising at the fastest rate since October of the previous year. The sector's efforts to manage costs have been compounded by a reduction in new order inflows, contributing to the overall contraction in production. Apart from the decline in production and new orders, Russian manufacturers also reduced their workforce numbers at the end of the third quarter. The pace of job shedding was the fastest since October 2022, with production requirements decreasing alongside difficulties finding skilled candidates to fill vacancies. This reduction in employment is another sign of weakening conditions as businesses balance costs with reduced demand. Supply delays and reliance on existing inventories to supplement production led to a slight decrease in pre-production stocks. Firms continued increasing their input purchasing, but at the slowest pace in 2 years. Despite ongoing challenges, stocks of finished goods grew at the fastest rate since June 2023, driven by lower than expected new orders. The rise in inventory suggests businesses are either preparing for future disruptions or anticipating a potential recovery in demand. Looking at the data over time, the PMI has shown stability between 50 and 55 in most years, indicating modest but sustained growth. The chart shows occasional dips, particularly during major global events, such as the drop below 40 during the 2020 pandemic. The recent fall to 49.5 in October 2021 marks a moment of concern as the PMI slipped below 50, signaling contraction. This is in contrast to earlier peaks, such as in 2021, when the PMI reached over 53, indicating much stronger growth at that time. The long-term trend shows that while the Russian manufacturing sector has seen periods of solid expansion, the current decline shows broader challenges that have persisted throughout 2024. The Russian manufacturing sector has recently entered a phase of contraction after a steady period of growth. According to S&P Global's latest Purchasing Managers Index, PMI data, Russia's PMI fell to 49.5 in September 2024, down from 52.1 in August. A PMI below 50 indicates that the sector is shrinking, whereas a score above 50 signals growth. Over the last 3 years, Russia's PMI has experienced both growth and decline, shaped by a combination of internal policies, geopolitical events, and global economic pressures. In September 2021, the PMI stood at 50, which shows stagnation with no major change in manufacturing activity. Over the next few months, the index rose above 50, reaching 52 by January 2022, showing moderate growth. However, with the onset of the Russian invasion of Ukraine in February 2022, the PMI immediately fell to 49, signaling the start of a downturn. By March 2022, it had dropped further to 44, the lowest recorded level in Russia's history, mainly due to the imposition of Western sanctions and disruptions to global trade routes. In the months following, the PMI began to recover. By May 2022, as Russia shifted towards a wartime economy, the index slowly climbed back above 50. This increase was driven by a rise in state-sponsored manufacturing, as the government directed resources toward defense production and industries critical to supporting the ongoing conflict. Between May 2022 and March 2024, the PMI remained above 50, reflecting a period of steady growth. By March 2024, the PMI hit 56, the highest ever recorded for Russia, driven by strong government contracts and a focus on domestic production as international markets became less accessible. However, the recovery was short-lived. In the 6 months leading up to September 2024, the PMI showed a downward trend, indicating growing uncertainty in the Russian economy. The drop from 56 to 49.5 within this period shows the mounting challenges facing the sector. The latest reading of 49.5 indicates that business confidence is declining as manufacturers struggle to navigate the evolving economic landscape. Sanctions on Russia have been one of the most significant factors affecting the sector's performance. One of the primary reasons for the downturn is the intensifying impact of economic sanctions. Since the invasion of Ukraine, Western countries have imposed several rounds of sanctions, targeting key sectors such as energy, finance, and manufacturing. These sanctions have led to a major reduction in Russia's ability to access international markets and secure vital components and raw materials. Furthermore, secondary sanctions have been imposed on countries like China and India, discouraging them from trading with Russia. This has created additional pressure on Russian manufacturers who rely on international partners to purchase their goods. Many foreign businesses are now hesitant to engage with Russian companies, fearing repercussions in their own trade relations with Western markets. Another factor contributing to the contraction in Russia's manufacturing sector is the increasing cost of production. Supply chain disruptions, particularly in transportation and logistics, have caused delays and inefficiencies in the delivery of materials. Rising costs of fuel, transportation, and basic inputs have also driven up the prices of goods. Manufacturers have had little choice but to pass these rising costs on to consumers, leading to higher output prices. This situation is worsened by the fact that Russian manufacturers are now struggling to sell their goods internationally, resulting in declining new orders and shrinking production levels. The labor market in Russia's manufacturing sector is also facing difficulties. As the conflict continues, a huge portion of the workforce has been drawn into military service, creating a shortage of skilled labor. Companies are finding it increasingly difficult to fill vacancies, especially for highly specialized positions that are crucial for maintaining production efficiency. This has further impacted the sector's ability to meet demand and sustain growth. Between 2013 and 2021, the labor force in Russia declined from around 76 million people to just over 73 million, showing a steady reduction in available workers over the years. The unemployment rate, while fluctuating, dropped to about 4.5% in 2021, indicating fewer people available in the job market, especially in the critical manufacturing sector. The decline suggests that the sector is entering a period of sustained contraction unless major changes are made to address the underlying issues. While the Russian government has attempted to boost the manufacturing industry through state orders, particularly for defense-related goods, this is not enough to offset the broader decline in the sector. Looking forward, the Russian manufacturing sector faces an uncertain future. The combination of tightening sanctions, rising production costs, supply chain disruptions, and a shrinking labor pool is creating a challenging environment for businesses. If these issues are not addressed, the PMI is likely to continue falling, signaling deeper contraction in the months ahead. While some businesses remain optimistic about future growth, particularly those that have secured state contracts, the broader sector is likely to remain under pressure. The rising costs in Russia's manufacturing sector have been a huge challenge, particularly over the past year. Input prices, including raw materials and transportation costs, have continued to climb, placing increasing pressure on producer prices. These costs are being passed on to consumers, causing a steady rise in prices across the board. Over the past 12 months, producer prices in Russia have been consistently rising at an alarming rate. In September 2023, producer prices increased by 16.7% year-on-year, a significant hike that set the tone for the rest of the year. In October and November, these prices spiked even further, reaching nearly 22%. The upward trend continued into December 2023, where producer prices rose by 19.2% before slightly increasing to 19.4% in January 2024 and 19.5% in February. While the pace of price increases began to slow in the spring, they still remained elevated. By April 2024, producer prices were 18.4% higher than the previous year, dropping to 16.2% in May and 14% in June. In July 2024, the year-on-year increase reached 13.7%, and the latest available figures for August 2024 show a 10.2% rise in producer prices compared to the previous year. To fully understand the severity of the situation, it is important to note that these increases come after a year of already high inflation. For example, in August 2023, producer prices had increased by 10.6%. This year's rise of 10.2% shows that inflation continues to be a persistent issue, causing difficulties for businesses in managing costs and for consumers facing higher prices. The S&P report confirms that these inflationary pressures are not easing. In fact, input and transportation costs in Russia have reached their highest levels in over a year, exacerbating the strain on businesses and consumers alike. The ongoing rise in costs suggests that inflation will continue to be a major challenge for the Russian manufacturing sector in the months ahead.